Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalam ala Sayyidina wa Nabiyyina Muhammad wa ala alihi wa sahbihi ajmain. Your Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum and good morning. My name is Mustafa Adil. I am the head of Islamic Finance at Refinitiv, and I am honored to welcome you to our webinar titled Islamic Finance Growth Through Innovation, held under the patronage of His Excellency Dr. Fahad al-Mubarak, the Governor of the Saudi Central Bank. The webinar is organized by the Saudi Central Bank in collaboration with Refinitiv, which is a London Stock Exchange business, and will focus on the future of Islamic finance, and particularly the role that innovation is going to play in its ongoing growth and development. We are privileged to have some of the leading industry executives with us today to share their experiences and insights, and in particular to highlight their expectations of what the future holds for the Islamic finance industry. So, without further ado, let us begin, and it gives me great pleasure to invite Mr. Nadeem Najjar, the Managing Director for Middle East and Africa at the London Stock Exchange Group, to deliver his welcome remarks.
Thank you, Mustafa. Your Excellency, Dr. Fahad Abdullah Mubarak, Governor of Central Bank of Saudi, distinguished guests, ladies and gentlemen, good afternoon. It gives me great pleasure on behalf of the London Stock Exchange Group to welcome you to today's virtual event on one of the fastest growing industries across the global economy, Islamic finance. The COVID-19 pandemic undeniably redefined what business as usual has meant to governments and organizations. The Islamic finance industry was not an exception. The pandemic was a game changer, as several Islamic banks reported losses and reduced profits. That said, the pandemic also accelerated growth across many areas of the industry, as some regulators turned to Islamic finance to mitigate economic impact. We have seen corporate sukuk issuances pick up after a cautious hold in the first quarter of 2020. Furthermore, companies took advantage of low borrowing costs to shore up their finances as the pandemic continued to batter trade and economies. Today, as we delve in how innovation fuels growth, it is important to highlight how regulators and Islamic finance organizations proved their capacity to expand and develop the industry in new innovative areas such as digital services. While the global lockdown forced customers to use digital channels for their day-to-day banking needs, new regulation emerged and advanced digital channels were created. Despite the pandemic volatility, Islamic finance continued to see a solid growth. According to the Refinitiv Islamic Development Report, global Islamic finance assets are forecast to reach $3.69 trillion by 2024. Currently, there is over 1,400 Islamic financial institutions operating in over 80 countries. However, few governments are taking a proactive position in taking this fast-growing industry to the next level. Saudi Arabia is at the forefront of this global industry development effort. The Islamic finance industry in Saudi Arabia is the largest globally among jurisdictions with dual financial systems, where Sharia-compliant banks operate alongside conventional banks. Furthermore, the total Islamic finance assets in the kingdom were valued at $794 billion in 2020, achieving a 16% growth rate since 2017. The Saudi Islamic banking sector is also the largest globally, with assets valued at $544 billion in 2020, which constituted 70% of Saudi Arabia's total banking assets. Today, the kingdom is leading an innovative and strategic program to ambitiously grow the industry over the next few years. In this regard, we note a series of sound Islamic finance initiatives rolled out by SAMA, such as the creation of an Islamic finance database, the launching of specialized training programs, creating new professional certifications in Islamic finance, organizing awareness events, enhancing a Sharia governance framework for banks and financial institutions, and launching an Islamic finance research translation program, among other initiatives. As we start to move towards a post-pandemic world, our high-caliber speakers will be debating today how the industry tackles the macroeconomic challenges, emerging technologies, and changing customer preferences. On this occasion, I would like to thank His Excellency Dr. Fahd Abdullah Al-Mubarak, Governor of Saudi Central Bank. We have always been honored to work with SAMA. The vision and foresight of SAMA and its leadership team has been instrumental in spreading awareness and creating collective action to effectively address industry challenges across the financial landscape. I would also like to extend my appreciation to our high-caliber speakers that have come together to share their knowledge, expertise, and best practice on the crucial issues facing the Islamic finance industries. Ladies and gentlemen, thank you very much for your time, and I hope you enjoy our insightful discussions. Thank you.
Thank you very much, Nadeem, for those welcome remarks and insights. And I'm sure many of the items you touched today will set the tone for the discussion with the rest of the speakers as the day progresses. Thank you. Ladies and gentlemen, with that, it gives me great pleasure to introduce His Excellency Dr. Fahd Al-Mubarak, the Governor of the Saudi Central Bank, to deliver his keynote address. Your Excellency, the floor is yours.
Thank you. Thank you, Mustafa. And also I'd like to thank Nadeem, Najjar, and all the organizers for this important event. Indeed, Islamic finance growth through innovation is a very important topic. Your Excellency, esteemed guests, ladies and gentlemen, Saudi Islamic finance sector has consistently grown over the past 4 decades. Saudi Arabia is endowed with Islamic banking assets that reached more than $565 billion US, as Nadeem mentioned. And this is as of the end of first quarter this year. And now we are the largest Islamic finance market globally, which represent almost in Saudi Arabia over 74%. And as Nadeem said, the market has grown, but as of the report of 2020, it was $2.88 trillion US and growing. The Saudi Central Bank continued to support the development of Islamic finance sector through a large number of initiatives. Those include the issuance of Sharia governance framework that was also mentioned by Nadeem for the banking sector and finance companies. In addition, the Saudi Central Bank has recently launched the Islamic Finance Research Support and Translation. We believe that a continued research in the areas of Islamic finance are very important. Also, translating both into English or into Arabic are very important to be able to share it with a wider audience. Saudi Arabian economy and its financial sector has remained resilient in the face of COVID-19 pandemic. Measures taken by the Saudi Central Bank serve to boost confidence in the private sector and ensure the continued flow of financing to support businesses of all sizes, especially SMEs. The Islamic finance sector will continue playing a vital role in the realization of the rebound of the Saudi economy post the pandemic world. Saudi Central Bank plays a key role in fostering development that help achieve our Saudi Vision 2030 objectives related to the national economy and financial sector. We have worked to enhance the digital infrastructure of our finance sector to bring forward innovative growth. Today's event will explore this theme through several panel discussions with speakers from domestic markets and abroad. Those sessions will cover the landscape of technological enhancement, digital banking, and Islamic FinTech in the post-pandemic world. The Islamic FinTech space, in particular, offers an exciting new growth medium for the industry. We aim for responsible innovation by taking into account both the opportunities as well as the risks. Islamic finance growth has always been dynamic, and I believe we will continue to see this dynamism as we move to the new horizon. In closing, I look forward to today's event and to hear valuable discussion from our respected speakers. Thank you all and wish you all the best. Thank you.
Thank you very much, Your Excellency, for your keynote address. And as always, it's very heartening to see many of the innovative initiatives that Saudi Central Bank takes to continue to lead the development of the Islamic finance industry. Thank you. Assalamu alaikum, ladies and gentlemen, and welcome back to our webinar, Islamic Finance Growth Through Innovation, that is organized by the Saudi Central Bank in collaboration with Refinitiv. Welcome back. I hope you enjoyed your short break and got to refresh yourself, and we will now move to the second panel of the day, which will be Digital Banking, Embracing the Future. I'm very pleased to welcome our speakers for this session. We have Mr. Ashar Nazim, the Group CEO for Aion Digital. We have Mr. Fernando Plaza, the Chief Digital Officer for Arab National Bank. And we have Mr. Naif Berdisi, the Head of Digital Technology Platforms and Capabilities at Bank Al Jazeera. Gentlemen, thank you very much for being with us today. Now, before I start the session, again, to get the audience involved, to get the delegates involved, we'll start with the second poll question of the day. And our second poll question is around what is the biggest benefit for Islamic banks to implement a digital banking strategy, right? And we've put various categories. Obviously, all of these are important. Is it about obtaining cost efficiencies? Is that the primary driver? Is it about improving customer engagement? And we talked a lot about customer engagement in the previous sessions as well. Is it about speed of service and delivery, increasing the efficiency in terms of speed? Or is it about producing innovative products and services that align more with customers' lifestyles and needs? Now, obviously, any digital banking strategy would have all of these factors in consideration. But from the delegates' perspective, we want to know, from your perspective, what do you think is the most important driving factor? And I can see the results here relatively evenly split, between customer efficiency, cost efficiency, customer engagement, and innovative products. But speed of service and delivery seems to be the most, with 40% of the votes. So it seems that our audience feels that Islamic banks are driven by a need to provide faster services and faster solutions, and that really is driving their digital banking strategy. Some very interesting insights, and I would love to now put this to the speakers. And maybe, Fernando, I can start with you on this question. Reflect upon what the audience has just said, but I think more broadly, when we talk about the significance of digitization, how well, in your opinion, do you feel the Islamic finance industry or the banking industries in our region have been able to implement digital banking or digitization strategies? And what has been the impact of that adoption? Are they achieving the KPIs that they set for themselves when they entered into the journey?
Yes, thank you. So I think the question is also in relation to the poll, right, which is some of these questions. I think the region has been probably doing well in terms of some of this adoption. For example, if you look into self-servicing and cost reduction, which actually is one of the poll suggestions, I think the industry is doing well because there is every KPI that you can track across the market in terms of digital adoption and in terms of transactions by digital channels is growing very substantially, right? But if you probably go to the next layer of digitalization, right, you can help the cost reduction and then you can actually shift your revenue towards digital channels and then also create new avenues of growth. On these two or the other elements is where we will start to see a bit more growth now, right? So I think the industry is doing well from the cost reduction and the purely operational side of things. And we have seen this during COVID last year. I think we are starting to be more aware of how to create value and drive growth through digital. And then the ultimate frontier for us, I guess, in relation to the new business models, how can we operate more as fintechs and create new partnerships and things like this? And this is actually something that we probably haven't seen too much of yet, but we will definitely in the future.
No, that's very interesting that you mentioned. And that's actually like a full journey. If you go from the operational aspects through to creating value and then to potentially reinventing your entire business model, right? That's what the digital strategy is all about. That's very, very interesting insights. We'll touch more about this and pick at each one of these as the session goes. But I want to quickly bring in Naif and then Ashar on this. So Naif, the same question to you. In light of the feedback that the audience has given, how well do you feel the industry has adopted digitization or digital strategies, and what has been the impact? Are they seeing return, a impact in terms of the KPIs that have been set up for this?
Well, let me start with saying that there's a great shortage in the skill set of digital transformation in the globe. So, in my opinion, organizations need to invest in developing those skills. But nonetheless, I believe that most organizations had a digitization plan embedded in their overall strategy in the last couple of years. However, after the pandemic took place, these plans were significantly accelerated and the pace of adoption was rapidly increased. Now, this was done in two folds. Internally, to conducting business from online meetings, approvals, workflows, signatories, automating of processes, etc. And externally for serving customers, where organizations have accelerated their plans to serve their customers over their digital channels rather than via their traditional branches. An example of this in the banking industry is that prior to the pandemic, most of the banks already had KYC update online service, and they also had the online account opening service. Today, we are very close, and I believe most of the banks do so as well, to launching services online on the digital channels for applying credit cards, personal finance, and mortgages. Now, I believe this even goes further to working with FinTechs, where banks want to provide and offer services to their customers that are more customized and are more personalized, even if this requires an integration with a third party, of course, under the regulation of the central bank.
Some very interesting points, Naif, and I think it transitions very well into, getting insights from Ashar. Naif mentioned this point about, this shortage in skill sets, right? And this point about integrating with FinTech partners. And Ashar, I think, you're familiar with, I think, both the challenges for institutions. So from your perspective, when you look at your clients and you look at their digital strategies, how well do you see them embracing and adopting digital technology, digitization, and are they seeing the impact against the KPIs that they set up when they go into this?
Bismillah ar-Rahman ar-Rahim. Thank you, Mustafa, and a very interesting question, right? I mean, let me take a step back and let's determine what the ask here is. The ask here is, how do Islamic banks reinvent themselves to become data-first businesses? And what that means is, from a traditional product push play, how do I move towards a platform play? How do I move from my own proprietary products, proprietary distribution channels, to actually a platform play where you're introducing a set of capabilities, both yourselves as well as third party from around the market in a collaborative model through a cost structure and revenue share model that we've never experimented before. That is what the ask is. So my vote will be, yes, the industry is doing reasonably okay, but they're not bold enough, and a much more bolder push is required. So let's see, what does that mean? So if you talk about, for example, is the starting point is the acceptance there that the banks need to reinvent themselves to become data-first businesses? So at the board level, I would say yes, a tick mark, the acceptance is there. At the management level, I would say a reluctant yes, for reasons mentioned in earlier panel as well, that job insecurity is there. 70% of the skill set that you see in banks today will become redundant in the next 2 to 3 years, I would say, right? So acceptance, yes, it is there, and acceptance to work with other than branded legacy tech players, yes, that acceptance is there as well. So a tick box overall. When you look at budgets, have budgets been allocated to actually follow through on these talks? Answer is yes, a big tick mark, right? But then comes, is there enough boardroom capital in Islamic banks that understand what the data-first business models look like? And there I would like to submit is where we are lacking big time, right? And first and foremost, the board structure needs to be challenged, need to be looked at, and we need an outside-in challenge. You need people who understand tech, data, who understand the collaborative business model, to be at the forefront of your boardroom. And that is a big miss, one. Second is when you look at the execution model, we again will agree that, we are still struggling. Islamic banks are still struggling. It's a mixed bag there. The fail fast, win fast approach, is still evolving. Banks are still asking themselves, probing whether they want a vendor relationship or a collaborative relationship with fintechs. A multi-tag approach is missing. An API strategy is still a work in progress. So yes, execution, mixed bag. And when you look at POCs, how have POCs gone? They've gone relatively good. So starting with customer acquisition digitally, that has produced very good results. It has brought down the cost of customer acquisition by 80%. In many cases, it has increased the market reach of many of the smaller and mid-sized Islamic banks by 5 to 10x. So a good start, but hasn't translated yet into personal finance, into mortgage finance, into auto finance, into SME finance. The answer is it's still work in progress. We are just getting started. We need to be bolder.
Very interesting insights, Ashar. And I think that, resonated a lot probably with what was said in earlier panels where they talked about the mindset challenge. And, what you're saying is not even about willingness. It's also about redefining probably some of this executive or board structures that we have in place. Very, very interesting insight. I would put this to Fernando now. In light of what is being mentioned, broadly, what have been the key challenges that you would say banks have learned in this last 1 year, right? Everyone agrees that the pandemic, as Naif mentioned, has accelerated the pace of adoption of digital technology. What have been the key challenges and lessons learned? And do you agree with Ashar that, despite having a broad acceptance at different levels of institution, there are issues around having the expertise within the executive structure and having the execution of how to achieve what you want to achieve?
So in terms of the comment, and definitely from Ashar, definitely, right? So some banks are more progressive than others in terms of executive mindset of digital, right, and investment, and whichever bank was still in a point where they were not sure. Last year probably made them actually accelerate the decision making, and probably this year you can see a lot of digital transformation programs being set up, for example, in terms of banks in KSA, right? Banks that were not investing in digital last year, they are this year very heavily, right? And as Naif said, this is the consequences. There is a talent war, really difficult to find good people. Last year, for example, it was difficult to find good people here, and due to the travel restrictions, it was difficult to fly people over to help other companies to accelerate the transformation, right? So definitely on the executive level, that used to be the case. I think a little bit less now, and it's moving in the right direction, right? In terms of the challenges, for banks there are many challenges on many fronts, right? First, competition is moving very fast, very fast, much faster than probably many banks can actually move. If you look into fintechs, if you look into small, nimble teams, they have a huge ability to deliver very high value, very fast. They don't need to worry too much about profitability because they have a huge investments. Any number that you look in the market last year, I think it was like $1 billion of investments in capital in VC capital in the region for technology, right? So you don't need to prove profitability. You can continue to invest and improve the experience and be very competitive. Then, from the bank's point of view, you need to think about, okay, you need to invest yourself. So where do you invest, right? Because there is so many places to do, right? You need to support your retail consumer market. SME is a huge market. It's also growing. Corporate, extremely competitive also. You need payments is transforming itself. Internally, you need to support the bank from the digital transformation point of view to digitize processes. So anywhere you look, there is opportunities in remittance also, right? So anywhere you look, you need to decide where to invest. So this is also one of the challenges, right? And then there is a whole topic of ways of working, right? So whereas in a fintech, in a small company, you are a small company, your decision making is very concentrated and very fast. In the bank, you need to deliver all of this, and at the same time, you need to kind of transform your business, right, in terms of your ways of working, because you want to go fast. You need to be delivering value in payments, in customer experience, in data, at the same pace than competitors, which are digitally native, and you need to change the organization at the same time, right? So anywhere you look, there are challenges that you need to face. The banks are very aware of this. And then if you add to all of them is remote work from COVID, the talent shortage, it is definitely challenging, right? But at the end, it's a consequence of a lot of investment from new companies, a lot of new players in the market. Some are definitely helping customers to have more choice, which is creating a very healthy competitive environment, at least from the customer's point of view. For the banks, is definitely more of a challenge. But there is definitely a number of challenges that we have to deal with, and it's definitely part of the day-to-day.
That's very interesting. And before I move to Naif, Fernando, I mean, you mentioned, the talent war, competition, where to invest, and the way that they're working, compared to a nimble organization. If you had to pick one challenge which you think is the most significant, that you feel, if you crack that, that's the main thing for an institution to tackle first, what would it be? What do you think is the biggest issue?
I think we'll probably say two. I would probably say speed to market and customer centricity, right? If you are able to manage those two, if you can have a mindset of, at the end of the day, you need to deliver world-class customer experience. You need to compete on customer experience, right? And this, in time, will bring business, okay? And sometimes it's a concept that sometimes is difficult to fully buy in. And secondly, the speed to market, because if you don't react quickly to what the market is doing, you're going to be left behind. And speed to market in terms of the processes that many banks have today is still too slow for what the customers are demanding, and too slow for what other companies can offer today. Okay, so probably these two, customer experience and speed to market, I will say, if you can crack those down, you will be in a much better competitive positioning to compete in the market.
Very interesting. With that, I think, I want to move to Naif with the same question. Naif, you heard from Fernando regarding some of the challenges that he highlighted. Do you concur with him that these are the biggest challenges from your experience? What do you think are the biggest challenges when it comes to a bank looking at digital strategy and implementing it successfully?
No, I fully concur with what Fernando stated, but I also believe that the challenges encountered can be categorized and summarized under two types. One is the IT infrastructure readiness and compatibility for digital transformation, and two is the mindset on how to do things differently. And to elaborate on the first point, many banks had promptly attempted to modernizing their infrastructure, their application design, their architecture, in order to be able to cater for digital transformation and even to connect to the outside world. Now, on the second point, the mindset of both the business and IT teams have to change in order for it to evolve and induce agility and probably the redesign of their business processes in order to deliver the service in a different way and in a more agile and dynamic way. And of course, like Fernando said, we need to create a better customer experience, and this is one of the primary challenges that we are all faced with.
That's very interesting, and I think it sums up very nicely 2 points that you mentioned, which also was brought up in the first panel, in the CEO panel as well. When you talk about IT infrastructure and mindset, right? What are the key drivers that can be utilized to address this? Is IT infrastructure only about investment, about upgrading systems and investing, or is there a way to go about bringing it in line to be able to embrace the needs of the product and services going forward? And likewise for mindset, is it like Ashar mentioned where, does it need to originate from the board down? Or is it something that at every level has a different perspective in terms of aligning the mindset?
To answer your first question, I think it's more of a hybrid approach. It requires investment in technology, of course, especially if we speak about the new API architecture and all that. And it requires the redesign of business processes and how businesses look at things and look at their services and how they seek for them to be delivered. I think it's a bit of both. And whether the vision should be cascaded top-bottom or bottom-top, I think, again, it's a mixed approach. And at every layer, there has to be some sort of awareness and cascading the vision to all people at that level. So people has to own the idea, has to own and drive that change.
No, that makes a lot of sense. So Ashar, I want to bring you into the conversation. I mean, you've heard, Fernando and Naif both pretty much in agreement as to the challenges and the way to tackle and highlighting obviously, customer centricity and speed and agility as being key requirements. When it comes to other stakeholders in the space, right? Whether it is regulators, whether it is, services institutions like Aion or others that are, facilitating the development of, or the transition, I would say, of the industry towards, as you mentioned, a data first or digital first industry. What role do they have to play within this landscape, right? And specifically, regulators obviously being a very, very key stakeholder. Right. What should the regulators be doing, and what should other stakeholders be doing to help facilitate this journey?
Again, a great question, because here we are talking about creating a brand new ecosystem, right? With a lot of new players, but also some existing anchors. And we work in different markets across Middle East, North Africa, Asia. And I would say some of the markets stand out when it comes to the regulator taking a very proactive approach. And a historic sentence that sticks in my mind is when the governor of a central bank said, we'll never have the full 100% answer. We'll have to make best guesstimate and move on with embracing digital rather than trying to be absolutely risk-free. And also when we work across different markets, what we see in Saudi is the way the SAMA and the ecosystem around it have endorsed digital is absolutely amazing. I mean, we work in UAE, we work in Kuwait, Bahrain, a number of other markets. And I tell you, let me share with you what are the three defining initiatives which we believe is going to reshape Saudi. And it's directly led by SAMA, and of course, the likes of SEMA and Ashar and Ministry of Justice and Saudi Post, they're all part of it and they're playing ball. I mean, amazing chemistry. And the three defining features for Islamic banks and banking industry in general, one is open banking. And open banking is going to turn the balance of power in favor of consumers, right? So after Bahrain, Saudi is the second market that has made an explicit announcement to introduce open banking. We expect regulations to be out soon. We've got a very well-structured model in the case of UK, where you've got a trust directory, you've got aggregator model, you've got a number of FinTech, and it has really opened up. This is an opportunity for banks to actually deepen their relationship, increase their engagement with customers, right? And it's a great opportunity for them to actually drive innovation. And for the market at large, what you will see is a number of new players coming out, direct impact on financial inclusion, as well as financial well-being, right, of consumers, which are the basic principles of Islamic finance, I would say. So open banking is going to comprehensively transform, and we love the way SAMA is steering this forward. Second one is around digital identity. Yes, Ashar is there. I would call it KYC 1.0. People who are working in Saudi, they will know that institutions have benefited greatly in terms of the ROI on customer acquisition. However, now is the time to bring KYC 2.0. Why? Because with open banking, you will have a lot of real-time data coming in from multiple sources that will inform your AML, KYC, and other asks. And just to give an example, in UK, in 2018, the number of API calls was 60 million, and that increased to about 6 billion by last year. Imagine the quantum change, right? That is the kind of paradigm shift we need to be ready for. And digital identity is going to change for good as well. And finally, what we see is home ownership. The mortgage ecosystem in Saudi in line with Vision 2030 that talks about how do we achieve the 70% target. It is roughly around 61% right now. Is going well. The growth right now is lopsided. It is in certain segments and certain geographies by certain institutions. But with a connected digital mortgage platform that we expect, just like in US and North America and other markets that we see, you will see a lot more balanced growth. You will see wealth creation at the mass level. And again, you will see a massive transformation, not just for existing Islamic banks, but a new generation of Sharia compliant boutique fintechs that will come to the fore.
No, that's very, very interesting, Ashar. And, definitely I agree with your sentiment. Regarding open banking in particular, which will then drive, digital identity and many other things, right? And I want to put it to Fernando and Naif as well. When it comes to talk of digital banking, when it comes to talk of open banking, right? Banks are generally quite defensive in this category, and for certain reasons. Do you feel that open banking is an opportunity for those that embrace it, or is it something that would be a challenge to banks in the medium term? Fernando, I'll start with you, and then Naif.
I guess that is so. I think it's it's a gray area, right? So I think as a concept, it's good for the customer. For the bank, if you ask the banks, do you want to do open banking? Many of them will say no, most likely. But the regulator will say we have to do it because it's good for the country, it's good for the customer, right? But then if you as a bank beyond open banking, because open banking by itself is going to be a regulation. At the beginning, it's going to be mostly for customer data. Okay, maybe in phase 2 you will have transactional services. But if you look into the concept of open banking, which is we need to have the ability to actually offer added value services that directly connects and enrich the customer's life, and you can find business models that work whether from consumer to consumer or from corporate to corporate, which actually maybe the corporate use cases are more profitable potentially than the consumer ones. The consumer one, you have a lot of them, right? You have personal finance managers, you have account aggregation. So if you look into only what the regulation will say, it's probably a bit limited to say, is it profitable? Is it good? It's definitely good for the customers, 100%. From the banks, it's unclear. But if you look wider than that, if you look into the concept of open banking beyond the specific regulation itself, and you look into the use cases, if you look into the opportunities, especially, like I said, on the SME corporate space, and some differentiating use cases from consumer, then I think it's definitely an opportunity for banks.
No, it's very interesting, and I completely agree with you. The use cases are coming up, the data is coming out, and it presents interesting opportunities for institutions. Naif, the same question to you, regarding open banking. How do you think the banks would view open banking frameworks, and how should they approach open banking to capitalize on any opportunities that do get presented?
Well, like Fernando just said, it's an opportunity for the customer, but in my opinion, the bank can treat this as an opportunity as well. At first, it surfaces as a challenge, but the more the bank capitalizes on this as an opportunity to better serve the customers and offer more personalized and customized services to their customers through fintechs and through what customers really are looking for, I think it can be treated as an opportunity. Of course, this goes with lots of challenges that you have to encounter and overcome, but in principle, I truly believe it's an opportunity.
No, that sounds good. I'm mindful of the time, and we have questions, and we've got audience questions coming in as well, so we will definitely get to those as well. But I have a couple of other things to go through. So, Ashar, I want to bring you back into the conversation, and from your perspective, right? We talked about, obviously, what's happening in terms of the regulatory environment and the opportunities that are coming through. Another thing that's coming is fintech disruptors are now entering the landscape, right? So, from your perspective, how do you see fintech disruptors fitting in to the broader financial services ecosystem? Are they standalone institutions? Are they partners with banks? Are they the innovators of technology that then becomes embraced by bigger institutions? How do you see, if I was to say 3 to 5 years from now, how do you see the role of fintech disruptors or fintech firms within the broader financial services industry in a market like Saudi Arabia, for example?
There's a huge entrepreneurial spirit that you see on the ground, and there's a tremendous amount of innovation and capital being put into this space. It's still too early to call. It will be my verdict. We do not see competition yet, right? I mean, it's still a very early stage right now. But we do see very credible challenge being put up to the traditional banking models, right? And something that cannot be ignored. Now, let me identify what the challenge is for both set of players. Now, for challengers, it's a very long road to customer acquisition, building their scale. It's a very long road to profitability, right? Primarily because they do not have yet, it will take them time to win the trust of the consumers. Whereas if you look at traditional Islamic banks, where they are going wrong right now, they're doing a lot of good things, but where they're missing out on is they are underestimating the quantum of change that reinvention requires. And therefore, you will see the same team responsible to run the bank and the same team responsible to change the bank. And that mindset has to change. It's a credible challenge that needs to be looked at. In 5 years' time, I feel there will be a more collaborative model between a lot of these innovative boutique players and the traditional banks.
That's a very interesting response, Ashar, and definitely, you touched upon something that Hassan mentioned as well regarding, doing your day job and completely transforming how you're supposed to do your day job, and being of two minds at the same time, which is interesting. Same question to Fernando and to Naif. Do you view fintech firms as potential partners, potential collaborators, or do you view them as competition? Very quick response, if you both would. Fernando first, and then Naif.
No, I'm on the thinking of if you cannot beat your competitors, you need to partner with them. So definitely, I view them as partners. Okay, this is good for the market. This is good for the customer. It's going to happen whether we like it or not. So because it's going to happen, we better partner with them. Okay, and let's actually help each other out, and let's actually build on our strengths. That's my view.
Sounds good. And Naif, do you view fintech firms as potential competition or partners?
Eventually partners, because in my opinion, traditional banking model will not last for long. I wouldn't say die, but rather evolve to a more digital-based, individualistic and customer-oriented that gives a wider perspective of the market. And in order to achieve that, ultimately banking as a service, you need to partner with all those fintechs, right?
No, that I completely agree, and it's interesting to see that all the panelists are of the same mind as to how these firms will come into the traditional formal financial system. Another question for Fernando and Naif before we move to the audience Q&A. And Naif, maybe we can start with you. Is obviously we've all seen the pandemic accelerate embracing digital technology and digitalization strategies. Once the pandemic is over, inshallah soon, and life goes back to normal, a new normal, let's say, will Islamic banks or banks in the region continue to prioritize digital channels, or has this been a case that they've been driven by necessity, and once things return to normal, they will revert to the old way of doing things? What is your view?
I believe the answer to this is an absolute yes, as the development and the adoption of digital channels has accelerated the pace of the game, and no bank can afford to fall behind. Nonetheless, this will not be only limited to the development of channels on its own, but also extended to the underlying layers that enable digital channels to operate in its desired model. For example, one very important and crucial area for banks today is the data warehouse, artificial intelligence, CRM. Now, while some mature organizations have this in place and it's in continuous cycles of enhancements, others do not have that in place and are given it a significant amount of priority due its substantial contribution to the digital channel service delivery.
No, that makes a lot of sense. Fernando, the same question to your side also. Do you feel once things revert back to normal, the prioritization of digital banking and digital strategies will decline, or do you think banks will continue to prioritize it even as things open up and revert to normal once again?
I think banks will continue to invest. I think if the pandemic has proved something, is that the cost of not investing in digital is much bigger than the cost of actually investing, right? If you see some banks that actually they were not ready from a digital model point of view, they couldn't operate last year. The cost of the disruption to the business model, the disruption of the operation is far more costly actually having invested in digital transformation, right? So, and that's why many banks are setting up this now, and I do believe that they will continue. And as the different banks start to invest, then the quality of the customer experience and the servicing will improve, and then things such as opening a current account, requesting personal loans, or paying your bill, it will be like the minimum standard that people will start to request, right? And then you will need to differentiate, and to differentiate, you will need to, as we said, you need to invest in data, as Nash said, right? So you need to invest in your data warehouse to differentiate, to build partnerships and to build marketplaces, right? So either you do that or you're going to be out of business. And I think this mentality is now well settled, I think, at board level and C-level in the different banks.
No, that sounds good. And I think that leads us very well into one of the audience questions that has come in, which I will direct to any of you who wish to respond. But basically the question is, in a nutshell, that there's a lot of investment that is required, and we've discussed all the different areas of investment that is needed, right? And when we think about the cost of investment and how it impacts a bank's profitability, particularly for institutions that are listed, that have, quarterly performance requirements and the market expectation for them to, continue to grow and continue to be profitable, how do you manage that, issue of continuing to invest in technology and in digital channels whose return you will not see for, potentially a few years, but then at the same time be responsible to shareholders who expect quarterly returns? How does an institution manage that? So that's an audience question. I'm happy for anyone of the speakers to answer, whoever would like to go. Please go ahead.
If I may, this question is a boardroom question again, and the board is responsible to look beyond short-term gains, right, and look for more of a long-term sustainable growth. And we talk about that investment in digital actually is far more rewarding than short-term profits. The narrative needs to change, and that again feeds into a fresh mindset is required, right, across board and executive management. So my thing is, the narrative will change. Uber, for example, is perpetually in loss, but why is the share prices, so sky high? Right? It is because the market believes in the data-first potential of their business, and they believe in the kind of experience they are offering, and they're willing to give a premium on that. And that is the kind of perspective Islamic banks need.
No, that's a very interesting perspective. And Fernando, just quickly on that, one of the things that you mentioned, as a key challenge was competition that's moving fast, that is investment-backed and not driven by immediate profitability, right? When you were mentioning one of the challenges to dealing with digitization, do you feel there is enough awareness amongst shareholders that investment in digitalization is critical to the overall success of these financial institutions, and therefore there is that willingness to invest for longer term returns?
I think that's something that maybe it's difficult to have a black or like a general answer to that. I think there is still many institutions that are thinking probably too short term, and they're not taking this into account, right? That you can have a digital attacker with a substantial funding, and then they don't have to charge any fees. They don't have to actually, the profit rates are extremely low, and they can keep this business approach for 2-3 years just in order to build customer base, So it's very difficult to justify this because, as you were saying, right, and as Ashar was saying, you need to explain to the board that this is a journey and it will take time. And if you look, maybe you can look into some KPIs, you can look into cost to income ratio, and you can track that. You can track into digital adoption, which is also a good metric. So definitely, I think there is still a mindset change that needs to happen to allow for that period of investment and growth. Because if that's not the case, you cannot compete properly in profitability versus companies that doesn't have to show that level of profitability.
No, that's a very good point. Another question that we got from the audience that I want to come to is an interesting one. Will the outcome of ongoing disruption generate greater consolidation amongst existing banks? Obviously, we've seen across not only Saudi Arabia, but in the GCC, broad moves towards consolidation from different institutions. Will digital disruption be a catalyst for even more consolidation in the market? And I'm happy for any of the speakers who would like to tackle that too. Please go ahead.
So, Mustafa, so two weak institutions together will not make a stronger institution, right? It is my take. So I would say that consolidation probably will not be the answer. It will be more collaborations, and they will be reconfiguration, right? So it will be, let's call it deconstruction, disaggregation, right? So breaking up the bank is what is needed, and then collaborating with other ecosystems for different parts of the bank is the way forward.
Very interesting. Deconstruction and reconfiguration.
If I may add
Yes.
myself, I think that's true definitely, but I think there will be banks that may not get to that point potentially, right? So will there be consolidation? At least I think that there will be some consolidation, because doing this right and doing this at the same pace than other players, it will become more and harder and harder and harder, right? So I don't think that I think it will be very difficult that all the 12, 13 banks are able to create this level of efficiencies and ecosystem. And there will be points where if you don't get to that, because you will need to get to that, maybe some consolidation will occur as a consequence.
And then, Mustafa, I would just like to add, again, in Saudi perspective, I'm extremely happy to see as an industry observer that there are institutions in Saudi who are taking some very bold, dramatic measures to, not dramatizing it, but they're not breaking up the bank, but they're definitely deconstructing the bank and saying, how do I put the pieces of puzzles together again in a different format? So we are very happy to see that. So Saudi could very much lead in the digital era when it comes to non-banking.
Very interesting insights, and definitely one area that we will all be watching as we move forward. I have another question, and I think I want to put this to Naif. Naif, given your role in an Islamic bank, the question asks, what role will digital transformation play for the Sharia perspective of an Islamic bank? And if I can elaborate on that, how will digitization help Islamic banks differentiate themselves in terms of their products and services when it comes to Sharia, alignment with principles of Sharia, or being Sharia compliant as solutions?
That's a very general question, because what applies in digital banking, what applies for Sharia banks, it goes, the same goes for conventional banking. However, if we think about this, yes.
What I was saying is, do you think that from a product perspective, technology can be utilized to differentiate a Sharia-compliant product from a conventional product? Like if we were to take a mortgage finance or an auto loan, or on the business side, SME lending, could technology be leveraged to differentiate an Islamic SME loan versus a conventional one?
It can be. I don't know if this is a wise decision to go with, but it can be. Can be. But if we are speaking about competition, Islamic banks competing with other Islamic banks could leverage on the use of digital technology to provide a better customer experience. But I wouldn't say that digital banking can be a catalyst or a driver for competition between Sharia or Islamic banking versus conventional banking. Because digital banking or digital technology at the end of the day is a mean to deliver service, right?
Of course.
Whatever that
and that means can be utilized by all the banks, conventional and Sharia.
By everyone. Yes.
Excellent. And gentlemen, with that, we're...
Sorry, Mr. if I can add an interesting perspective.
Go ahead, Ashar.
And I feel that with open banking and with the ability for customers to switch a lot easier and constantly will be, again, a great shift in how banking is going to work in the future. And I think it will help because we are transferring the control, the power, to consumers, where they are able to vote with their money if they like the service, the offering, the focus, the strategy of Islamic banks, right? And if they do not, they'll be able to vote with their money by moving their relationship to another bank, right? So I feel that this transition of power in favor of consumers, right, will force Islamic banks to become more Sharia compliant in substance in terms of focusing on sectors that that are closer to the essence of Islamic finance. For example, SME, for example, social housing, for example, industrial, for example, climate change, for example, sustainable energy, right? All basic tenets of Islamic finance has a great fit, right? And I believe that in future, we'll be seeing consumers and corporates voting with their money and telling the banks whether they like their strategies or not. So I'm not sure if Mustafa is still there. I think that.
Oh, sorry. Yeah. Hello. Can you hear me? My apologies. Yes, I made the cardinal mistake of a webinar where I left my mute on and continued speaking. But thank you so much, Ashar, for that insight. I was just saying that I completely agree with your point, and very soon I think we will see a point where we will see customers with the ease of transitioning, voting with their accounts and moving, from institutions more than we've probably ever seen in the past. With that, gentlemen, we are coming to the end of our session. Thank you so much for being with us here today. And, we look forward to having you in future webinars, and we will now